Mr. President, you pointed out in your State of the Nation address that our financial sector proved to be remarkably resilient in the face of the recent financial crisis and the global economic meltdown. In line with global developments, there are further steps to be taken to enhance the regulatory framework and improve financial services. The proposed reforms include a shift to a twin-peak system of financial regulation with market conduct under the Financial Services Board and prudential regulation in the Reserve Bank. An interagency financial stability oversight committee will be formed and a Council of Financial Regulators. A policy discussion paper sets out the new framework for how the financial sector could better serve South Africa. Among the issues to be addressed are the findings of Judge Jali's inquiry into competition in banking, findings that are echoed by many people's complaints that bank charges are high and opaque. As senior citizen Mr. Bill Nobile wrote to me last week, and I quote, "We do not fully understand the complexity of the payment systems for credit and other cards, but there does appear to be considerable leeway in reducing costs to the customer, including the elderly," close quote. I have met with the chief executives of our banks to take up this issue, and I believe it is time to put in place measures that will ensure that banking charges are fairly set, are transparent, and do not create undue hardships. As part of the work of modernizing and harmonizing our investment framework, Treasury is releasing 2 further discussion papers, one on the regulation of foreign direct investment and another on the prudential framework for institutional investors. We look forward to consultations with stakeholders on these issues over the coming months. What is the fiscal framework for the year and 2 years further ahead? South Africa adopted a counter-cyclical fiscal stance 2 years ago, ahead of the crisis. We entered the recent recession with a healthy fiscal position, we've got to thank Minister Manuel for that, and a comparatively low level of debt. This allowed us to maintain government spending despite a sharp deterioration in revenue. Government spending continues to grow over the next 3 years, though at a slower rate than in the recent past. Since the medium-term budget policy statement last year, several additional spending allocations have been made. They include a provision to respond to the damage caused by last year's floods. The impact of slightly slower growth in revenue and the additional expenditures is as a result causing a deficit for the next year of 0.7% of GDP higher than we projected in October. The trend remains downwards, however, with a deficit of 3.8% of GDP expected in 2013-14. This reduction in the deficit over the next 3 years is consistent with stabilizing the growth in our debt and the conduct of a counter-cyclical fiscal policy. National government net debt is set to rise from 526 billion at the end of 2008-09 to over 1.3 trillion in 2013-14. I don't know how many knots those are. Mr. Speaker, to ensure that our spending on schools, hospitals, and roads is not crowded out by an ever-rising interest burden, government debt needs to be managed sustainably. We don't want an unmanageable increase in expenditure, nor do we want the severe austerity measures some Western countries have had to adopt. In view of these considerations, Parliament asked the National Treasury to investigate how we might reinforce long-term sustainability of our public finances. For the further consideration of Parliament, we will be proposing a set of fiscal guidelines informed by 3 principles. The first, a counter-cyclical fiscal stance to counteract variations over the business cycle. What this simply means is that there will always be time when growth is good and revenue is good, and there will be times when growth is not so good and revenue is poor. We need to save in the good times and spend in the bad times. And how we manage these cycles as they go on is the crucial challenge that this counter-cyclical fiscal policy will allow us to meet. Secondly, long-term debt sustainability to ensure that financing costs do not crowd out expenditure on public services. By this we mean we can borrow, but we must make sure that the interest that we pay on our debt doesn't become so huge that we don't have enough money to spend on housing, on welfare, on education, and on other priorities in South Africa. Thirdly, intergenerational equity, so that our children's well-being is not compromised by short-term interests. It's easy to borrow now, but future generations will have to pay for that borrowing. And so we need some balance between them. Developing fiscal and budgetary guidelines will strengthen parliamentary oversight, encourage transparency, and enhance accountability.